Alright, thank you guys for clicking on this week's video. Today we're going to go over value stocks versus growth stocks. Now, the main difference between a value stock and a growth stock is a value stock is a stock that is considered to be undervalued compared to what is trading in the market, and a growth stock is a stock that is trading below what it thinks it will be trading in the future. In other words, a value stock is a stock that should be trading higher than it really is, but not by a lot, and a growth stock is a stock that is projected to go a lot higher in the future because they're doing new things or they're trying to take over their sector, etc., etc. Long story short, they're supposed to be growing. Now, which one is better is more of the investor decide. Growth stocks tend to be a lot more risky than value stocks, but of course, like always, with more risk comes more reward. And the way you can tell if it's a value stock or a growth stock is very simple. So first, we'll go over a value stock. A value stock is typically a stock that's already usually a name brand, or they're already pretty big in their industry. And to tell if like they are a value stock in particular is you want to check mostly their book value. If they're trading below the book value, theoretically, and actually they kind of are, trading below what they should be trading, making them a value stock. Also check their PE ratio. If their PE ratio is, I would say anything below like 30 or even 20. And if they're trading below their book value, they're probably at a PE ratio of like 5 or below. Any of those numbers probably also suggest that they're undervalued. And the way Warren Buffett says he determines if stock is undervalued or not is he would look at all the financial sheets and decide how much he would pay for that entire company. And if it is below what each share is trading at, he'll buy a majority of the shares. And now for growth stocks, to tell if it's a growth stock or not, the first thing I would check is to see if they're paying a dividend. If they're paying a dividend, obviously they're not trying to grow because they're paying out a dividend. Those are their profits that they're giving back to the shareholders. The next thing I would check is what their PE ratio is. If it's really, really small, then they're obviously not in an aggressive growth state. If they are in aggressive growth rate, it is going to be a lot higher, which is a bit scarier, but doesn't mean the stock is going to drop because it's trading above its book value. It's trading what it believes it'll be in the future. And this goes back to the concept of market value versus book value. The next thing I would check after that is I would see what they're trying to do, what their business is really, if they're like an innovator or something, or they're like Amazon, which is a great example, where they're just trying to take over basically the world. And they're aggressively trying to grow their company more and more and more by opening more warehouses, developing new products, etc., etc. So that's basically the main differences between growth and value stocks. Me personally, I like to have both kind of stocks in my portfolio. Value stocks, so I could sleep knowing I'm making pretty good money. And growth stocks knowing that, hey, you know what, I have a chance at making the stars become my reality, or some inspirational quote, something like that, or whatever. Just because, you might as well have a little bit of risk. Otherwise, it's kind of boring. So anyways, I hope you guys liked the video. I enjoyed making these. Remember to like, comment, and subscribe for more future content.